Hello everyone, how are you? I'm Dr. Labus from Dr. Labus Academy. Welcome you all again for my ACCA channel, YouTube channel. Okay, today we are going to have regarding ACCA SBR, is it? SBR. This is the 13th in series. Okay, this is 13th in series. The most important thing, as you told, this is the number. Okay. You have to follow the number, and we are following the chapter wise. Okay, we are following the things as per the chapter wise. Till last 12 sessions we have done with respect to non-current assets and lecture chapter 5. Okay, I kindly request you all to subscribe to my channel, share this channel, post your comments in way how best we can improve it, and stay till the end. If you find it really worthy, please like it. Okay, I kindly request you all, please subscribe to my channel and share this channel. The only purpose is we can reach as many people as possible. Fine. Now coming back to this, this is the one topic which is now taking real you can say the real facts that's happening in the current world, is it? We are talking in terms of one thing. We are talking about agriculture. Okay, agriculture is taking. See, it is a topic where most of the people will do a lot of business, and it makes a good returns also. Fine, and how agriculture is related to inventories. That's very, very important. How these two are more related. We will see, when we are talking in terms of inventories, we are not taking anything separately. We are just discussing with respect to IAS 2 only. Okay, we are talking in terms of inventory valuation. You have the inventory valuation. With respect to costing, we are doing with respect to FIFO, LIFO, and weighted average. Fine, so on and so forth. Whereas from the accounting perspective, we will take into consideration the lower the cost or net realizable value. Okay, this is with respect to IAS 2, is it? I will say like this. This is respective with the financial accounting. Is it? This is more specific to the financial accounting, and this is more specific to cost accounting. You will not believe that. This is most related to cost accounting. Fine. This is more related to cost accounting. We will cover this and how it is IFRS. Is it? What is the biological assets? Is it? Biological assets. The first thing which it's very interesting. Okay, it's very interesting, and this assumes knowledge of strategic SBR. When we do the things, is it right? We have a classification. Is it right? We have a classification with respect to the agriculture and with respect to inventory. Fine. Make it a point how we will come into consideration. IAS 41, is it? IAS 41 talks about agriculture. Okay, and IAS 2 and IAS 2 talks about what? IAS 2 talks about the inventory as such. When we see the IFRS in this chapter, see little bit we have done in financial reporting, but here we have more open-ended questions. See, if you find this, if you understand this statement, how we are going to have a progression. Okay, if you understand how we are going to have a progression, automatically half of our task is going to be done fairly. Now, When we say IAS2 agriculture applies to biological assets. When you say biological assets, it implies to trees, is right? It implies to cultivated plants, okay? It implies to cultivated plants. It implies to the animals also, is that it biological. When we say it implies to what? It implies to sheep, it implies to cattle, it implies to all the things, whatever. See, we'll make a lot of trading as such, is it? They will put a lot of trade. Now you will make it a point. You will have a lot of dairy farms. Is it? You have a lot of dairy farms are there. Is that people will do, and they will just buy. They buy when they are born, when they are born, and they will hold it for 2 years, 3 years, maximum 1 year. 1 year, is it right? What will happen? The value of the animals, very simple. The value of the animals will increase, and they will sell it at a later stage. This is all we are doing in IAS 41. Fine. Now, what are the? See, they are given a very clear definition. Is right? They gave a very clear definition. It says that a biological asset is a living plant or an animal. Very simple, very clear. It's a living plant or an animal asset. When we are talking in terms, there's the biological. Now, what happens? There is another part. Okay, this is the first definition. This is the one of the definition. This is the first. I will put one. Okay, I will put one. What is the second one? In terms of agriculture harvested product of the entity biology. See what happens? The harvested product is that the harvested product. You take the example of dates. You take the example of, see, even if you take rice, is it right? If you take wheat, is it right? If you take wheat, these are all we are doing. We are taking in terms of coconuts, is it right? Is that you have talked anything? Is there anything which is going to be harvested and we are going to sell it at a later stage? Is it right? Or the cessation of biology? See what will happen? They see when you are talking in terms of plantation, landscaping. Okay, when you are talking in terms of landscaping, what the people will do? People will grow the trees. Is it right? See if you see the Gulf, is it right? You will have palm trees, is it? You will have trees, and they will sell the palm trees after 2 years, 3 years. You will have the timber, is it right? You will have the timber, trees are there, is it right? You will grow the timber trees, is it? It's a very, returns are very high. Yeah, you grow the timber trees over a period of time, and what will happen? You invest only $100. Is that? But at the time of maturity, it will give a good amount. Okay, assume it will give returns of how much? $2,000. Is it right? Over a period of time. That makes sense. Is that? That's what we are talking in terms of how the value of the products will increase. This is the second one. Next, third one is the detachment of the produce from the biological assets and cessation of biological assets life process. Is that what will happen? You take into consideration any product. Dates are there. Is it right? What will happen? It is a season. Every year it will happen. Is that every year you will have the produce? Is it right? You will have the produce. You at the end of the things, at the end of the process, you will sell and you will get returns. Means when you are talking in terms of biological assets, is that when you are talking in terms of biological assets can be classified, is that classified into various in terms of living, plant and animal specifically. Is where we are using. See the thing, just now I told you, a farmer buys a calf, is it right? Calf, 1 month, 2 months, but this calf is a biological asset. It will grow, it will become a matured cow. is it? And there is a transformation, is it? It's going a mature cow. They will get the returns from the cow. They say that yes, we will milk it the cow, and they will get the byproducts of the milk, very clearly byproducts of the milk, or they will sell, is it right? They will sell the meat of the product also. You will get the meat of the product. It happens in both the cases. The farmer milks the cow. Here we are talking about when we say the milk has been harvested. Milk is a agriculture produce. Milk is means you can say that we are just taking at a very initial stages. Is that we are investing at a very initial stages at a small amount. The things will grow up over a period of time, and at some specific point of time we are going to get the returns. Is it right? We are going to get the return. You can take the asset for a continuous period of time. Now, when we do this exercise as such, see, this is how we have to think in terms of accounting. Is that how we have to have a recognition criteria? It is a recognition criteria that applies to the asset. Fine. How it is applying to the asset? It applies to other biological asset also. Plus or minus some deviation is there. There is a probability. There is a probability that there is some probability means yes, there is a chance of occurrence that there will be economic benefits will flow to the entity. The cost or fair value of the asset is reliably measured. This is with respect to conceptual framework. All the time whenever we discuss it, make it a point. Give reference to conceptual framework. It should be reliably measured. Is that faithfully presented? Is that's what it says. The second one always comes. It is faithfully presented. These two things will go side by side. And what is the asset? It's nothing but the entity will have the control rights over the asset. Next, when we are doing the thing, see how it will have effect. That how it will have effect asset. A biological asset initially measured at fair value less cost to sell. Always, is it right? You have a fair value of $1,000 and there is a selling cost will be there. Assume selling cost is 20. Is it right? This is the initial cost. This is the initial cost and this is the selling cost. Cost to sell. Means if that is the case, how much we will take? We will take it as a 9. That's the basic recognition initially. Whenever you are buying, see you are buying coughs. Is it right? You are buying 100 coughs. 100 coughs at the rate of, you will say that we are buying at the rate of 50. It comes to how much? It comes to 5,000. But for this, you will have some expenses will be there. Is it right? You will have some expenses. You are paying expenses of $200. Is it right? Means what is the fair value? Fair value will be 4,800. Gains or losses may arise in profit and loss account when biological assets is first recognized. What is the loss? A loss is nothing but the estimated selling costs are deducted. A loss can arise because estimated selling costs are deducted from the fair value. Whatever the estimated selling cost is there. Definitely, if you are saying it's an expenses, if you don't have these expenses, is it right? If you don't have these expenses, definitely what will happen? If you don't have these expenses, definitely the profits will be, is it? The profits will be more by how much? Will be more by 200. Okay. If you have expenses, the profit will decrease by 200. A gain can arise when a new biological asset, as a lamb or a calf, is born. See the thing. This is very, very interesting, is it right? You see, this is the people will do, is it right? You will have cows, is it right? Is it right? You put like this. You are having the cows. Or take from this one, is it right? Now you will have calves, is it right? Now you have assumed that you have 20 cows. Is it? You have 20 cows are there. Now, if you take this as an example, assume you are having this on 1/1/2001. Okay. At the end of the year, is it that? At the end of the year, 31/12/2001. Is it? This will give calves. Assume you are having. They assume that there will be 10 calves will be there. What will happen? It will increase the assets. Is it? Previously opening balance is 20. Got my point? Understand this very in a simple concept. Closing balance will how much? Closing balance will be 30. Is that? Closing balance will be 20 is the opening balance and 10 is the new calves. Is it? This is nothing but a gain. A gain is arise when the new biological asset is born. Now, fine. This is a very simple. What happens subsequently? At each reporting date, at the end of the each reporting date means at the each year ending. Okay, year biological assets are revalued at fair value. What is the fair value? Definitely, there will be some. See, there will be opening balance. Is it right? There will be a new bonds. Is it right? There will be new bonds. Some will die. Okay, and you will have the closing balance. Is it right? Now here you have a market value. Fine. Here you will have a market value. Again you will have the closing value will be there. Fine. Here the closing market value. Definitely what we will do, we'll take the market value times closing balance in terms of number of cows plus cows will get the closing balance. This is what it says. There will be a gains and losses. Is it right? There will be gains and losses. There will be some additions. Okay, there will be some additions and there will be some deletions. If there is the case, it has to be recognized in what? In either case, it has to be recognized in as simple as that. What we are doing with respect of other and assets, is it? The fair value of biological assets may change because of age, because of prices in the market value change. See, I will give you an example. Is it right? I will give an example of horses. Is it right? If horse is young, is it right? If he is young, what will happen? The price will be more. Is it right? The price will be very, very high. If the horse will become older, the agility will not be there. Understand my point? That's what it says. The agility will not be there. Automatically what will happen? The price will be less. This happens it differs from animal to animal, biological asset to asset. Is it right? Biological asset to asset. And more or less the rule will, you will talk about the horse, you talk about the camels also. Is it right? You take the camel, you take most of the animals. When they are young, the value will be more. When we become older, it not happens. See, I am telling you this. It not happens only to animals. It happens with respect to human beings also. Is it right? It happens. I will give you the very specific. You will find it very interesting. It says that, when the people will recruit. Is it right? People will recruit fresh graduates. Is it? Nowadays, what happens is they are recruiting fresh graduates. Why they are recruiting fresh graduates? They will have new knowledge. They have. See, I'm not saying that they will not give preference to experience. Experience is also part of this. But people prefer to give all chances to fresh because they will come with new ideas. Okay? This is what it says. It may change because of age, because of prices in the market change. Definitely. Because of prices means you will have demand and supply. Okay, you cannot say that. In some cases, in some areas, demand for horses are more. In some areas, demand for cows are more. In some areas, demand for camels will be more. Is it right? In some areas, the demand will change. Commercial, is that commercial products? As simple as that. IAS recommends what they will say. What is the rule? IAS recommends separate disclosure. Got it? They're recommending what? They're recommending a separate disclosure and price changes because information is likely of the users. Because users of financial statements are very much interested. Is that you have the dairy farms. People are interested how you are doing. You have poultry. Is it right? You have the poultry farms are there. You see the thing. The people will import poultry from the foreign countries. Brazil chickens. Is that Brazil poultry is there. You talk about beef. You talk about sheep. You talk about various things. There is a export and import. It's more or less it's a very commercial activity. Is it right? Because the information is to be of interest to users of finance. However, this is not mandatory. This is not that much specific. Biological assets are presented separately in the financial positions with non-current assets. Within the non-current assets, is that within the non-current assets, you will have what? One of the non-current assets will be the biological assets. In some cases, there is a inability to measure fair value. If there is an inability to measure fair value reliably, their fair value should be capable of measure reliably. If market prices are not readily available, then they say that it is cost minus accumulated depreciation. You can say accumulated depreciation or you can put it as amortization. Accumulated impairment. Is it accumulated impairment? When we say it's a accumulated, we don't know what is the life. We don't know what is the life of the trees. Is it right? We cannot make it that we cannot fix it. Is that you have date trees? Is it right? Palm date trees will be there. You have coconut trees will be there. Is that you have grapevines will be there. Fine. Now you cannot determine that this will have a finite life. Okay, most of the trees will have a infinite life. Wherever there is a infinite life, we use the concept of impairment. Fine, we use the concept of impairment. Now, once the fair value can be measured reliability, it should be remeasured at what? There is a blanket understanding that it is fair value less cost to sell. See, now you can understand what is the biological assets. Biological assets is nothing but living animals and the plants. It talks any harvested product. And any biological asset will have a life processes, conversions, as simple as that. Okay, this is with respect to what we have done. We have done a little bit of IAS 41 till now. Slowly and steadily we will add the standards. Okay, slowly. What it says, the test were on 1st January. Put the dates 1/1/2001. How much a farmer has a herd of how many cows? 100 cows. Is that how many cows are there? They have 100 cows are there. which were 2 years old. Is it? What is the age? 2 years old. At this date, the fair value less point of sale cost was how much? What is the fair value less cost to sell? Is it right? Fair value less cost to sell is how much? It is 110,000. Okay. Now, what happens on 1st of July 2001? Okay, on 1st of July 2001, they have purchased additional 20 cows. Is it right? The age is how much? 2 years, 6 months. Is it right? For how much? For 60 each. Is that how much they have purchased? They have purchased it for 60 each. How much will come? 20. Is it right? How much will be 20 into 60? It comes to how much? Times 20 cows. It comes to how much? It comes to 21,200. Is it right? Now, as of 31st December, 3-year-old cow sell at market at rate of how much? 90. Fine. Market auctioneers have charged a sale levy of 2% for many years. Means it is applicable. Is it right? It is applicable for every transaction. It is applicable for every. Now they have purchased how much? They have purchased 20 cows. Is it right? 20 cows. On 20 cows, what you have to do? You have to reduce what? 2% sales. Is it 2% sales levy? Means how much? It comes to 24. Okay. It comes to 6,711. This is the fair value of. This is the fair value of what? This is the fair value of of 20 new cows. What they are asking? Discuss the accounting treatment of the above financial statements for the year ending 31st December 2001. 31st December 2001. So how many cows are there? 100 plus 20. Is that how many cows are there? 100 plus 20 as such. Now, this 2% will be charged at what? This 2%, if you take into consideration, it has to be charged in the profit and loss account as a loss. Okay, this is going to be charged in profit and loss account. This to be charged in profit and loss account as a loss. Yeah. Now we have to take into consideration what is the cows with respect to what is the value of the cows. Is it right? As on this is the value of new cows. Fine. But make it this as a step 1. Make it this as a step 1 and this as a step 2. Is it right? Make it as a step 1 and make it as a step 2. Now, how much they have sold it? They have sold how many cows? Closing balance. Is it that? Closing balance of cows as on 31st December 2001. How much are there? 100 plus 20, 120 cows. Is it right? How many cows are there? 120. Next, value of this how much? Is that 120 cows? Put one dash here. Is it right? Value of 120 cows. How much is the value of 120 cows? Will be 120 into selling value. They are selling at a market value of how much? selling value. Is it selling value? $120 times $90. Okay, 120 times $90. How much it will come? It will come 120 times $90. It comes to how much? 10,800 minus they have the sales levy. Is it right? Sales levy. How much is the sales levy? At the rate of 2%. Okay, times 2. Okay, how much is the sales levy? 216. What is the value? 10,800. It comes to how much? 1010584. Is it 10584? Fine. Now, is it? Now we have to. This is the value. Okay, the fair value. Okay, the fair value. We can put like this. Okay, this is the now. What is the step 3? Is it right? Loss on revaluation. Is it right? Closing value. Okay, we can put it as a closing value as on 31st. Closing value at the date of sale. Closing value at the date of sale. Okay, at the date of sale 2001. The loss on real. What is the opening value? Opening value, they have how many cows are there? They have, this is the closing value, is it right? Put it as A. Okay, put it as A. What is the opening value? Opening value is how much? Opening value is 100 cows. Is it right? 100 cows. They have said 100 cows. What is the value of 100 cows? A fair value less cost to her is how much? 10,000. Fine. New cows are how much? New cows are how much? We have calculated. Is it right? We have calculated this. How much? 1176. Is it right? 1176. It comes to 11,176. Is it? This is the total value. Is it? This is B. Is it right? Loss on revaluation. Loss on revaluation is equal to, is it right? Loss on revaluation equal to, what is the closing value? What? How much is the how much is the closing value? Closing value is at the date of sale. Date of sales is how much? 10,584 minus opening balance, opening value. Okay, total value. I cannot put at a opening value. You can put it as a total value. Okay, you can put it as a total value. Is it right? This is A. Okay, this is A and this is B. Okay, how much is there? 11176. Okay, 11176 plus 11176. Is it right? How much is the loss? Loss is 592. Okay, difference is the loss. Means when this is what happens is that you have the cows at the beginning of the year. You will have the additions during the year. You have to deduct the selling cost, and you have to show that selling cost as a loss in profit and loss account. Fine. as a loss in profit and loss account. Subsequently, it has to be reflected. This is a simple way of doing, is it? This is a simple way of, we are talking in terms of living animals, is it? Now, they have another way for the agriculture produce, is it right? They have the another way of putting how we have to treat it, how we have to deal with the agriculture when we are making a harvest. At the date of harvest, agriculture produce should be recognized. Same thing, fair value less cost to sell. We are selling dates, we are selling wheat, we are selling vegetables, is it right? Definitely what will happen, there will, we are giving some commission, we are giving some in some cases discounts, we are giving some sales taxes, sales levies will be there, is it? Whatever the means, in substance, it says that we have to measure at a net realizable value. You will have, see, when your gains and losses on your inclusions will be identified in the profit and loss account, operating profit. After produce has been harvested, it becomes inventory. Very, very important. See, first it will be IAS 41. Okay, first it will, is it? Once it is harvested, it will become IAS 2. Is it? It will become IAS 2. The transformation that's happening, that's very important. The transformation that's happening from IAS 41 to IAS 2 is most important. Once it becomes an inventory, therefore, automatically what will happen? The IAS 14 will cease to apply. Okay, right? It will not be IAS 14. It will be treated as what? It will be treated as IAS 2. The initial measurement value at the point of harvest is going to be the cost. Is it? Is going to be the cost. And for the purpose of the IAS 2, this will be implied. Means again, when this transformation is important from IAS 41 to IAS 2. This is a point which you should understand. Very important, is it right? Some cases IAS 41 does not apply to intangible assets. Is it? They will not apply to intangible assets. What is the concept of intangible assets? How intangible assets will be calculated? Intangible assets will be calculated at the amortization. Is it right? They will calculate at the amortization. Means fair value measured at the cost less amortization or fair value less amortization. This is the rule. This is the basic framework of IAS 38. Fine. Now, this is first it says that does not apply to intangible assets, bearer plants or to land related to agriculture activity. How the bearer plants are used to produce for more than one period? What are the bearer plants? Examples: grapevines, tea bushes, dates. Is it right? Means what is that? The plants will be there. Is it right? The plants will be there. The trees will be there. Is it? You are going to utilize, you are going to take the produce of those assets. Now, again, if in this case, these plants and trees, is it right? These plants and trees are going to be treated as in accordance with IAS 16. Is it right? This is treated as an IAS 16. That's what it says. Bearer plants are accounted for in accordance with what? IAS 16. That is an asset for you, is it right? That is an asset for you which is going to give you returns for more than 1 year. However, any unharvested produce growing on a bearer plant, such as grapes on grapevines, is a biological asset. Is there any unharvested anything? The grapes on the grapevines is a IAS. The grapes on a grapevine, is it right? Any unharvested growing on a bearer plant, such as grapes on a grapevine, is a biological asset. So it is according with what? It is accounted with a IAS 40. That is the basic difference. See, now we are what is happening. See the thing. Land is not a biological asset, but it has a treated as a tangible non-current assets for IAS 60. Means what happening? See the thing. You will have a land which is treated as 16. You will have a biological assets treated in IAS 41, and you have the produce of that biological asset. It will be treated in IAS 2. Getting your point? See the thing. Here you are talking in terms of land. Here we are talking about the grapevines. Here you are talking about the grapes. When valuing a forest, for example, trees must be accounted separately from the land. You have to separate, is it right? You have to separate the trees. Is it right? You have to separate the trees from the land. Land comes under IAS 16. This is the basic and core definition with respect to the three different standards which has been accounted. Fine. Now, based on that, we will do one small question. Based on that, we will do a small understanding. Fine. Now, what they are saying. Good Wine is a company that grows and harvests grapes. Grape vines which produce a new harvest grapes each year are typically replaced after how many years? 30 years. Means the life is how much? The grapevines is 30. Harvested grapes are sold to wine producers. With regard to property, plant, equipment, grapevine accounts for. See, make it a point. I follow this. You divide the things as each sentence. Grapevine is a company that grows and harvests grapes. Grapevines which produce a new harvest each year are typically replaced how many years? 30 years. Harvested grapes are sold to wine producers. Is it? With regards to the property, plant, equipment, grapevine accounts for land using the revaluation for all classes of assets. On 30th June, the grapevines are carrying amount of how much? 300. Remaining life is 24 years. The grapes on the vines which are generally harvested in August year have a fair value is how much? Has a fair value of 500. The land used for grapevines had a fair value of how much? See the thing. You have a grapevines of this is what? This is of IAS 41. The grapes are there. Is it right? It is IAS 2. And you have the land is there. It is IAS 16. On 30th June, grapes with a fair value of 100,000. Is it right? On 30th June, grapes fair value of 100 were harvested early due to unusual weather conditions. The grapes left on the grapevines have fair value of 520. The land has a fair value of 200. All selling costs are negligible and there is no selling cost. Okay. Discuss the accounting treatment. Discuss the accounting treatment as well. Now, when we make it a point, is it right? When we make it a point, what they say that see, I am putting a small workings here, okay? I am putting a small workings here as and when it happens. Is that grapevines are carrying amount of how much? 300, and the remaining life is how much? The remaining life is 20 years. Is it right? Means how it is going to be worked out? 300 divided by 300,000 divided by 20 years. Every year it will be how much? 15,000. Okay, I will show you the thing. What is the carrying amount? Is it that carrying amount will be how much? Carrying amount will be 300 minus 15, it comes to 285. It comes from us 285. This carrying amount will be when? This carrying amount will be on 30th. This is the opening, okay? This is the opening, and this is going to be 30th June 2002. Is it? 30th June 2002. Now, what we'll do, we will make it very specifically how it has to be worked out. The first one, okay? See, when we make it a point, we will do the things like this. We have to think about the land, we have to think about the grapevines, and we have to think about the grapes. Is it right? For step 1. Is that step 1 in terms of land, okay? In terms of land, IAS 16, property, plant and equipment. How much is the land value? Is it how much the land has a fair value of how much? The land has a fair value of 2.1. Okay, the land has a fair value of on 30th June 2000. 30th June 2002. What is the value of fair value of land? Fair value of land is how much? The fair value of land is 2.1 million. Okay. What is the land? What is the on 30th June 2001? Is it right? On 30th June 2001, see, land value will get appreciated. Land value will not get depreciated. Okay. And on 30th June, they say that the land used for growing, the land used for growing the grapevines fair value. It is on which fair value? It is fair value on 30th June 2001. Is that fair value of land is how much? The fair value of land is 2 million. The difference, is it right? The difference is revaluation gain. How much? 0.1 million. Is it right? 0.1 million. How we have to treat it? Is it right? Is it? How we have, what is the debit entry? Debit and credit is the debit is the asset. Is it right? Credit will be what? Credit will be other component of E. Is it right? Credit will be it should be taken into revaluation reserve. Is right? It has to be taken into revaluation reserve in terms of equity for 0.1 million. Is right? What is the revalue? What is the value? We will show it in the statement of financial position. In the statement of financial position, we will show to. Fine. Now, this is with respect to what? This is with respect to land. Yeah, this is with respect to land. Next, what happens? Again, they have the plants. Is it right? They have the plants. How much of grapevines are there? Step 2. Is it? Step 2, grapevines. Step 2, grapevine. They have mentioned on 30th June 2001 the grapevine is how much? 300,000. Is it right? How much is the opening balance of the grapevine? The opening balance is how much? The 30th June 2001. Okay. How much is the balance? 300,000. Is it? Grapevines. It also accounts under IAS 16. Is it? It also accounts on. Now, how much is the amount is there? It is 30,000. Now, if the what it says, keep it in mind. What it says, I will come back to this. Inability to measure. Is it right? If market price are not readily available, then the biological asset should be measured at cost less depreciation and accumulated impairment and losses. Once the asset's fair value can be measured reliably, it will be remeasured at this one. Okay, this is what it says. And apart from that, yes. Okay. Now, means when we take that into consideration, how much is the value of grapevines are 300,000 minus depreciation. Is it right? Minus depreciation. How much we have calculated here? Is that we have calculated here? How much is the depreciation? 15,000. It comes to how much? 285. Is it right? This comes to how much? 285. This is the carrying amount as on 30th June 2002. Is it 30th June 2002? Now, fine. This is step 2. Slowly and steadily we have to work it out on the things. How the only purpose is we should have a very clear understanding about how the things are working with reference to IAS. Next, step 3. Step 3 talks about what? Step 3 talks about the grapes. This is grapes comes under which one? 41. Is that? Grapes comes under 41. Initially it will be 41. Once it is harvested, it will be transferred to 2, IAS 2. Is it right? It will be transferred to IAS. Now what they have mentioned, they mentioned that the grapes left on the grapevines have fair values. How much? The grapes left on the grapevines. Okay, the grape left on the grapevines 30 June 2002. Is it right? The inventory. Okay, the inventory, it will be how much? It will be the grapes is on the grapevines is 520. Is it? The grapes left on a grapevine is how much? 520. Okay. Now, what is the value of this? Is it how much is there? They say that what is the opening value? 30. Generally harvested each year. The grapes on the vines which are here, the grapes on the vine which are generally harvested in August each year has a fair value of how much? Has a fair value of 30th June 2001. Okay. What is the fair value? Generally harvested. Fair value is how much? Fair value is, they said that there is no selling cost. Okay. There is no selling cost. How much is there? 20,000. Is it right? This difference is gain. Okay. This difference is gain. It has to be with what? Profit and loss account. Is it? Next. There is something is there else. Is that on 30th June, grapes with a fair value of how much? 100,000. Is it right? Is that because of unused weather conditions? Is that unused weather conditions? They have harvested early. Step 4. Is it right? Step 4. That is also inventory. Is it right? It is also an inventory. Harvested early. Okay. Harvested early. This is also inventory as per IAS 2. Everything we have to give in reference to accounting standards. Okay. In reference to accounting standards or reporting standard. That is the most important thing with respect to SBR. Is it right? It is with respect to how much? Unusual harvest condition. How much is the fair value? The fair value is how much? 100,000. Is it right? It is what? It is nothing. It is also gain. Is it right? Which has to be treated in profit and loss account. Is it? It has to be treated in profit and loss account. This is the way it has to be. It has to be. Anything else they have mentioned? They say that the grapes left from the grapevine has fair value of 520. Okay, 520. Is it clear? This is the way it has to be. It has to be structured. I have put it for your convenience. I have put it in different steps. Follow this. Is it right? Follow this in a sequential order. The rule says that what I suggest, is it right? What I suggest is first you sort out the things in the question, divide the question into as smallest as possible. It makes sense. Okay? Divide the things as smallest as possible. It makes the sense. Now, sometimes what will happen is that, see, government will give lot of grants. Okay? Government will support. In most of the countries, government will support. Government will support for various reasons. Is it that the government supports with respect to the grants, with respect to the subsidy? Is it with respect to the subsidy they want to promote? Is it that they want to promote exports? Is that they want to promote exports with respect to, and definitely they want to, what will happen because of that? There will be an employment generation. Agriculture and government grants. See, now what happening? We have done IAS 41, IAS 16, IAS 2. Now we are adding another one. We are adding IAS 20. In between we have done IAS 38 of intangible assets also. See how many standards we are covering in this. We not only we are revising it, but we are also know how it is going to be interlinked. If a government grants related to a biological assets, it should be measured at cost less accumulated depreciation. Is that it is either it should be cost less accumulated depreciation, or it is cost less accumulated impairment. Fine. It has to be measured. That's very clear. It is accounted in IAS 20. We have done IAS 20 in one of the previous sessions. If the government grant relates to biological assets, if the government grant is related to biological assets, it has to be measured at fair value less cost to sell. Then it is accounted as IAS 41. See the thing. If a government grants related to a biological assets measured at its cost less depreciation, it is accounted in what? It is accounted in IAS 20 for under IAS 20. If the government grants relate to biology, if the government grant is measuring at fair value less cost to sell, there are two different things are there. One, cost less depreciation, cost less accumulated depreciation, or cost less accumulated impairment, then it has to be done in IAS 20. If it is done with respect to fair value less cost to sell, it has to be accounted in IAS 41. There is a huge conceptual difference is there between government grants IAS 20 and IAS 41. If it is cost less depreciation, is that if it is cost less depreciation or cost less impairment, it has to be shown in IAS 20. If it is fair value less, it has to be shown in 41. There are two things there in this process. We will have a unconditional government grants. If it is unconditional government grants, the biological assets measured at fair value less cost to sell, it should be recognized in profit and loss account when it becomes receivable. Is that when it becomes receivable? That is an unconditional way when it is going to be treated. Whereas we will cover this. A conditional government grant related to measured at a fair. They will have sometimes what is the unconditional grant is there. When there is an unconditional grant, you have to recognize in profit and loss account when it becomes received, means when you are actually receiving that amount. Is it right? Whereas a conditional grant is what? Yes, we will once you are meeting these conditions, we are going to release these grants. Is right? Once you are meeting the specific conditions, once the conditions are met, if it is recognized in profit and loss account when conditions are met, means in a conditional grants, you have to match, is it right? You have to match the requirements. You have to match the conditions what has been proposed, is it? What has been proposed and what has been achieved. In non-conditional grants, it's not like that. When we receive it, as we receive, you have to post it in the profit and loss account. There's nothing like that. But in the conditional grant, that is not the case. Definitely, it will change the presentation with respect to profit and loss account. As in case of all the standards, you have to give a description of the biological assets. You have to make any assumptions, and most importantly, there will be a reconciliation between the every time we will do between the opening balance and the ending balance. We will get the difference. Sometimes profit, sometimes losses, sometimes revaluation gains, sometimes revaluation losses. Is it right? That's what it said. Now, coming back to this, we have done this before in FR, financial reporting, IAS 2. The same thing we are carrying forward. We are not doing anything else. Okay. Inventory is measured at cost. Is that inventory is measured, when you say inventory is measured at cost, it includes the purchase cost, conversion cost, and any other cost. Purchase cost they are giving, is it right? We all know, we have gone through these stages, is it right? It is nothing new for us. You will have a conversion cost. What is the fixed cost? What is the variable production cost? Is that we fixed production cost must be based on the non-level of activity. In terms what we are doing, we take into consideration what is the, if anything is there, we have to take that into consideration. Any wastage, storage cost, abnormal cost must be excluded. Is that it has to be excluded from the valuation. And what we have to do, it has to be charged as expenses. Administration expenses, is it right? Storage expenses, warehouse is there, rent is there, is it right? You should not add up these costs to the inventory. Fine, you should not add this cost to the inventory. Is that there are three methods of arriving? Is that in terms of actual unit cost, you have FIFO, you have average. Coming back to the what is the subsidy, this is happens from the costing point of view. Okay, this happens with respect to the financial accounting cost. As per accounting standards, we have the concept lower of the cost, net realizable value, line by line basis. What is the net realizable value? See the thing. Now you have the thing. What is the selling proceeds? Is it right? Less any completion or selling cost. Is it? That is the net realizable value. We use the word NRV. The NRV of the inventory satisfies a sales contract evidenced by that contract. However, in other cases, NRV must be estimated. When measuring NRV, the standard permits similar items are grouped, assuming that they are sold in the same market. The standard permit items to be grouped together, assume they are going to be selling in the same market. Fine. Raw materials are not written below the cost. If finished goods, they will form is part of sold at the profit. See the things. What lower the cost? Is it right? Lower the cost. If they say lower the cost, is it right? You have purchased it. How much? You have purchased it for 10,000. Is that NRV will be 12,000. Is that you can the value will be 8,000. Is it right? The current cost will be 8,000. You cannot go beyond 10,000. Is it right? What are the disclosures? Definitely the carrying amount by individually, details of individuals at the net realizable value. A small question they have given. Yeah, a small illustration, valuation, how they say. You see, we know this, but see the thing. These things are really important. We are very specific to this. Raw materials costing is how much? 12,000 for processing and assembling of a special order. Since buying of this item, the cost of raw materials has fallen to how much? 10,000. Is it right? Now, when we say this, we cannot, what they say, costing is how much? 12,000. Is that bought for processing and assembly for special order. Since buying, the cost has been fallen. How much you have paid? You have paid 12,000. Understand the thing? See, the cost has been fallen. Fine. We are taking this on basis of what? On the basis of historical cost. Is it right? Historical cost. See, how we have to show in accordance with IAS 2 inventory, what amount should be, the item should be valued. Lower the cost, okay? How much is the cost? 12,000. Buying the items, it fallen to how much? The cost price of raw materials fall, fine. Market value has been fallen. That's okay. Raw materials should not be written below cost. If the finished good they will form a part will be sold at profit. In future, it will be 12,000 plus, is it right? 12,000 plus profit. Is it right? Means that has to be done. You should not go beyond 12,000. Therefore, the inventory should be valued at the cost. As simple as that. Equipment constructed for a customer for an agreed price of how much? 18,000. Okay. How much they have agreed? They have agreed with 18,000. This has recently been completed at what rate? 16,800. It has now been discovered that in order to meet certain regulation, conversion with an extra cost is how much? 4,200. Conversion cost is will be required. The customer accepted partial responsibility and agreed to meet how much? Half of the cost. What is the cost to complete? Is it it? This is the cost to complete. Okay. How much is there? It is 6,000. How much the customer is agreed to pay? The customer is agreed to pay only 2,100. Okay, 2,100. Fine. Now, this has recently completed at a cost of 16,800. It has been now discovered that in order to meet the certain regulation, conversion cost with an extra cost of how much? 4,200 will be required. Is that 4,200 will be required? Now, is that 4,000? How much they have agreed to pay? They agreed to pay how much? They agreed to pay is how much? They agreed to pay only 2,100. Fine. Means cost to sell. Is that this is the fair value? Is that this is the fair cost to? Definitely it is. It has been reduced. How much? 2,100. 009. 009, 5 and 1. The agreed price is how much? This is the agreed price. Is it right? This is the agreed price. This is the agreed price. Now he says that additional cost has been incurred. Is it right? Additional cost has been incurred. How much additional cost has been incurred? Conversion cost is 4,200. Is that? This is the agreed price. In the agreed price, it includes 4,200. Okay? In the agreed price means if you take this into consideration, 18,000 includes 4,200. But when it came into a settlement, is it right? When it is settlement, how much is there? He said that he will only pay 2,100. So what is the value of inventory? The inventory value will be how much? The inventory value will be 15,000 net realizable value. Is it right? The net realizable value will be how much? Is it? Is below the cost. Cost is how much? The cost has been identified. How much is there? Cost is 16,800. Is that? Net realizable value is how much? 15,000. This is the way we have to interpret the concepts as. Now you can understand what we have done. We have done with respect to IAS 41. We have done little bit with respect to 16. We have done with respect to 2. We have done something related to 20. Is a government grants. We have done something very, very partially with respect to IAS 38. Okay. Please revise this. Subscribe to my channel. And if you any comments, is that please post the comments. so that it will help us to make it much better as such. Fine. This is with respect to which one? This is with respect to agriculture and inventories, chapter 6, and this is in sequence of 30. Thank you. Best of luck.